Recording in progress. Recording in progress.
Hello, everybody. Hello. Hello, everybody. It's me, Dr. Arnaud Prévost, and I will be leading this session just like last week and the week before. It's great to see all of you today. We're going to start in just a little bit. It's great to see all of you. We have Gabe, Casey, Jaden, Vanessa, Valerie. It's going to be fun. We're talking about end of the year prep and tax preparation. And that is fundamental, really, really important. And so we're going to start in just a little bit. Just making sure that everybody's connected, everybody's well muted. We're going to walk through all of our video conference protocols and all of that. And always remember, any questions, we have more friends coming in. Any questions, please make sure to put them in the chat and I will get to them. Absolutely. We've got Deborah, we've got Veronica coming in. Great. So this is great. Once again, my name is Arnaud Prévost, Dr. Arnaud Prévost, and I'm the program coordinator at the Small Business Development Center out of Blue Mountain Community College. It is great to see all of you today. Absolutely. Wonderful to see all of you on this. And we're going to start in about 30 seconds. So this is great. This is great. All right. This session is meant to be interactive. So I want to make sure that everybody participates. Before we begin, let me go ahead and tell you, this is who we are. We are the SBDC, the Small Business Development Center out of Blue Mountain Community College. And we are here. This is great. I'm the program coordinator right over here. You see my information right over here. And we have business advisors that are coming in to this video conference. We are out of Umatilla, Wallowa, Baker County. It is awesome. It's great. Give us a call. Give us a call. 541-278-5833 at any step of the business development process, from business ideas all the way up to growth and strategies and all of that. Give us a call or send us an email, sbdc@bluecc.edu, sbdc@bluecc.edu. Once again, it's great to see we've got Jeff on the line here, who's one of our advisors. So again, any questions, please make sure to put them in the chat. Oops, went a little fast here. Or use any of the reaction buttons. You can do that. Thumbs up. I'll ask for a thumbs up just to check in with all of you in just a little bit. But again, please make sure that you're muted so that there's no background noise. That's important. It gets me a little distracted whenever I hear background noise, but that's fine. That's fine. Again, questions are all in the chat. We keep a tally of the questions so that other people can answer in the chat. So yeah, absolutely. If you missed the phone number, let me go ahead. I see Casey who missed the phone number and email. Let me go back actually to that slide right over here. I'll have the phone number and the email also at the very end. sbdc@bluecc.edu, 541-278-5833. We have more friends coming in here. 278-5833. Thank you very much, Valerie. Thank you, Casey, for your questions. And there you go. Let's begin. So what's on the docket for today? Well, we are going to go ahead and review some top tips from accountants to small business owners. We're going to go through a tax preparation checklist to help prepare for reporting. Very important. We're going to talk about how to get those tax returns done. We're going to look at a small business end of the year, year-end checklist to review this year and get ready for the next. And then we're going to take a look and review some more commonly used ratios for the year-end performance analysis. So if you were with me, I remember a couple names from last time. If you were with me last time when we looked at these ratios, this will be a nice review. But for everybody else, we're going to take a look at ratios as a way for you to go ahead and gauge what's happening later on for next year. So that'll be fun. That'll be fun. All right, let's begin. So we've asked accountants for some top tips for small business owners. And this is what we have. Oh, I'm sorry. I forgot to ask. I apologize. I went a little fast here. Can you, in the chat, tell me what industry or business type you're from or considering to start, considering starting, so that we get to know each other a little bit more. We have, who do we have here? We have Deborah, Vacation Lodging. Great to see you, Deborah. Wonderful industry. Valerie says bookkeeping. We have retail, interior design, bookkeeping for businesses. That's great. Design, local food delivery service from Christy. Great. Sign business. That's amazing. That's awesome. All right. So now we're getting to know each other and seeing what industry we're all in. And so let's see. Casey says TC excavation and hanging, A-bar trucking. All right. Awesome. All right. And that's great. So that's awesome. Well, whatever industry you're in, all right, it's important to listen and understand some of these tips for from small to small business owners from accountants. What are they? Well, the very first one that we have, oops, let me make sure that I get everybody here. The very first one that we have is this number one. Keep your business and personal finances separate. We don't want any commingling. That's important. All right. Make sure, oops, I went a little fast here again. I apologize. There you go. Let's go back to this one. We don't want any commingling. We want to make sure that it's kept separate. So when we're talking about business expenses, business income, that is in its own thing, own ledger, own software, own file. And then when we're talking about the private, personal expenses and finances, that is its own different thing. So we want to make sure that we keep it separate. There could be issues with commingling, and we don't want that. All right. Next, number two, keep track of all expenses. Now, that might seem like a no-brainer to a lot of people, but we want to make sure that we keep track of everything. All right. We're talking about receipts, documentations, proof, right? Any financial transaction that occurs, that is key. That is very important. That is very important. All right. Number three, balance the bank accounts every month, making sure that you know what's in the bank account and that it's done regularly every month or so that there are no issues, no mistakes, things like that. We want to make sure that it's as accurate as possible. All right. Next up, we have number four, use an accounting or record keeping method, right, or program to categorize and record your transactions. This can be as complex as FreshBooks, Xero, QuickBooks, a couple of them we're going to talk about today, or it could be something as simple as keeping a ledger on Excel. And so that's important too. All right, remember, long gone are the days of keeping receipts in a pocket, emptying it all out, right, at the end of the month or something like that. No, no, no. We are making sure that everything is tracked, everything is recorded for accuracy purposes, and related to number five, for tax purposes too. Lastly, number five, don't wait until the last minute to file your taxes. That's important. That's important. All right. Don't wait until the last minute to file those taxes. All right. Okay, let's go on and move on. Thank you very much, everybody. All right. I have a question for you. How comfortable are you with all five of these tips? Can everybody go ahead and go in the chat and give me a 1 through 9, I'm sorry, 1 through 10 response, how comfortable you are. So if 10, you're an ace. You do all these things, you're a pro. I do all the things recommended by the accountants, and I do them with ease, very easy. And number 1, not at all. All right, let me see. We have a number of 5s, 3s, 1s, 10s. Aha! So there you go. Thank you very much. So that's great. And that's also a way for you to gauge exactly the ease by which people do this. Deborah says a 7, but I do not practice much of it. Right. And that's important to understand that we practice this. Probably a 5, says Deborah. So that makes sense. That's awesome. All right. So now we know where we are at, where we're starting. Okay. And we know where we can get better. And there you go. So these are the general tips. So that's awesome. All right, let's move on. Let's talk about small business tax preparation checklist. What does that mean? What does that mean? Well, at the end of the year, you've got to make sure. Let's see. At the end of the year, you've got to make sure that you're prepped for the tax considerations. Okay, and so we're going to go ahead and start with a number of tips, checklists, so to speak. Check, 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 so that we know when all the taxes are due and how to go about it. So number one, let's talk. Find out when the taxes are due. All right. All right. S corporations, partnerships, we're talking about March 15th for the previous year. Sole props, single member LLC, C corporations, April 15th. S corporations that have filed an extension, right? Because that's something you can do, September 15th. October 15th is a C corporation that has filed an extension. So know when they're due so that you don't incur any penalties, any issues, so that there's no issues. Remember, we're talking about filing here, all right, not necessarily paying, all right? And that's a different sauce here, all right. Number two, get all the tax forms you will need, all right? Returns includes the summary page and supporting schedules. Sole proprietors use Form 1040 and Schedule C. S corporations use Form 1120 and Schedule S. Partnerships must then complete 1065, Form 1065, and then provide individual partner information on Schedule K1. Make sure to take good notes of this. And I'm going to go ahead and share these forms with you so that you can click on it, open it up, and save it on your computer or save it on your browser. And we're going to talk about that right now. I want to make sure that you have a copy of this. You forgot where it is? Don't worry. All you need to do is Google it. That's how I obtained these forms that I'm going to go ahead and show you. We're going to take a look at this in just a second. I want to make sure that if you're taking notes, I want to give you enough time here to write these down. Sole proprietorship, 1040, Schedule C, and so on and so forth. So let's go ahead and stop the share here, and I'm going to go ahead and share with you share with you the financial documents that we were talking about here. Let me start with the Schedule C. I'll have it up here on, and we did get a question here. I'll get to the questions and the answer. Thank you, Christy, in just a second. Just give me 1 second while I paste this in so that you can have it. So the Schedule C from Form 1040 is located right here. I have it in the chat, everybody, right over here. Okay. So in case you need it, it's right here. I want to make sure that I provide you with these. And again, you forgot where it is. That's okay. You can just simply Google it, 1040 Schedule C. Thank you, Christy, for all that wonderful information. That's awesome. Let's go ahead and do the Form 1120-1120S, like I was talking to you about, right over here. Here it is. Okay, nice. And let's go ahead and take a look at Form 1065, just like we were talking about. Again, it's all here. If you need it, it is right here. Okay, so I want to make sure that you take the time. Go ahead and click on it, everybody, and save them. All right. You want a different form, you can always Google them. Give me a thumbs up when you're ready for us to continue. Give me a thumbs up. Push that reaction button so that I can see. Give me a thumbs up. Yes, thank you, Christy. Jeff, we got it. Go ahead and push that reaction button. Jaden, Vanessa, thank you. Casey, thank you. Awesome. Valerie, all right. Good, good, good. I want to make sure that you have these for you in your files. All right. Thank you, Gabe. All right. Great. Awesome. Yes, this is exciting. All right. Let's do this. Okay.
Participants can now see their application.
Oops. There you go. So here it is. So again, sole props, sole proprietorships, you have it there. S corporation partnerships. Okay, get all the forms you need. That's number 2. All right. Next, number 3. Big point. Very important. They're all important. They really are. But get this, you must collect your business records relating to income. And that's very important. The IRS wants to know how much income your business has brought in. And as always, be able to explain it with receipts, with documentation. All right. So if you're using a program like Excel, or if you're using a program like QuickBooks, FreshBooks, Xero, or anything like that, you have the opportunity to go ahead and keep those files there, have proof, documentation, and just make sure that you collect it, all right, for the whole year. That's what we're doing, okay? Collect them, all right? Very good. Don't hesitate to use your phone also for any documenting, taking pictures of receipts or anything like that. Then you can sort it. You can place it wherever it needs to be. That's another option, another opportunity here. Very good. All right, next. Are we ready? Okay, so number 3, still collecting your records relating to your income. Let's talk about some tips, just some tips, some quick tips. All right, very good. Have records of gross receipts from sales. All right, very important. Know the goods you have received back as returns and any refunds you've made. Don't forget those. Okay, very important. All right. And next, remember interest or investment income from financial accounts in the business name. Are there any interest or investment incomes, right? Don't forget those. It's easy to forget those, right? Where we're just looking at the money coming in. Well, there are many sources of money coming in. And so don't forget those as well. Okay, very important. All right. That was a couple of tips for number 3. All right. Okay, next. Get documentation for business expenses. Okay, so many expenses can be documented by statements. All right, so not only for income, but also for your expenses. All right, so utilities, detailed credit card statements, auto payments from checking, and so on and so forth. That can be something that you can easily print out or keep with you or anything like that. I see a question here. Just a second. I'll get to that in just a second. Let me finish here. So here we go. Also, more documentation is needed if you have home office deductions, transportations, meal and entertainment, and business health insurance expenses. All right. Also, remember, always ask if you're taking advantage of any tax breaks. And you can ask that from an accountant. You can ask that from your SBDC advisor, and so on. They can lead you to the right answer. And that's important. Okay, that's important. So we're here getting all that information ready. We're here getting all that info ready. All right, from income, from expenses. All right. And we may not have all the information. We may need to request that information. And that's key. That's key. All right. Send out any required information and returns and make sure you have received the ones you need. All right. Maybe you're sending out, I don't know, maybe you're sending out W-2s to your employees. Maybe you're sending out W-2s to your employees. All right. Maybe you're providing contractors with a 1099 form. All right, if they earned more than $600, right? Or you might also want to get information on interest paid on loans, rent paid on property, fees for services provided by outside professionals, and so on and so forth. It's all about gathering it, all right? It's all about gathering everything. All right, so far so good. So we have our 5 steps. I'm going to take a quick break and get to the questions. Let me clear the drawings here. Let's see. Oops, click on the right button here. There you go. Dawn asked, I haven't started making money with my business yet. However, I'm paying bills related to the business through the business bank account. Do I still need to file taxes? Christy has answered. Thank you, Christy, again. My goodness, thank you so much. Save your expense. Christy answers. Save your expenses and claim them once you have income. They're startup costs. You can't deduct from zero, and that's right. That's right. You want to make sure that you save them as a startup cost. Right. Remember, whenever you're talking about expenses, you have your operational expenses, and then you have your startup expenses as well. So they are, in this case, thank you, Don, for your question, and Chrissy for the answer. They are startup. And yes, and you can't deduct from zero, right? As soon as you have that income, then you'll be able to deduct it. So that's pretty straightforward. All right. Very good. Thank you, everybody. All right, let's move on. Okay, so
Participants can now see
remember,
your application.
let
You
me
have
get to the
started
notes here.
screen share.
Oops. Let me get to the notes here. Remember, again, make sure that you provide your employees with that information, provide contractors with the 1099, and get information about everything else that you might need. You might need to contact people if you don't have it, maybe go on an online portal, but send out any, send out any information, any required information returned, and make sure you receive the ones you need. So that's key. All right. Number 6, let's talk about an extension. All right. So you can always file for an extension if you need to by filing Form 7004 before the original due date of the return. Okay, that's important. The extension is only for filing the return, not, and this is key, paying taxes due, right? We're talking about extensions here, and they typically last for 6 months and run through either October or September, depending upon how the business is set up. All right, again, are we talking about an S corporation, a single owner S corp LLC, C corporation? Is it a partnership? All right, refer back to the dates that we were talking about, and I will review the dates in just a bit. Also, state rules for income tax extensions can differ from federal rules, so make sure that you have that and you look at that. All right. Still, still talking about the checklist, and I see a question I'll get to in just a second. Make changes. Number 7, make changes for the coming year that reflect what you've learned in doing your taxes this year. All right. Did you pay a lot more in taxes? Were there any penalties? Okay. Is the estimated tax payment amount sufficient? And we're going to learn more about that. Let me finish with this slide. Overpaying could create a cash flow problem, necessitating the need to borrow, and it will cost interest and fees. Underpaying can cost interest and penalties. And so you have to make sure that you pay your taxes in the right amount, and you have to determine that. All right. Let's take a look at an article, all right, that I have for you about the estimated tax payment. Let's look at it together. All right. Okay. I'm looking at the questions. It wasn't a question. It was Jeff. Startup costs will go under owner investment on your profit and loss. Thank you. That is correct. Okay. Very good. Thank you, Jeff. Let's move on to our article here that I have for you.
Participants
right
can
over
now
here.
see
I'm
your
going to share it
application.
with you.
You have started screen share.
This is from our friends at nerdwallet.com. Let me go ahead and share it with you over here. Oops. Everybody open it up and save it, please. Save this article right there. This is everything you wanted to know with regards to estimated tax payment. This one is 2023. It was last updated in September, so this article is regularly updated. And let's take a look at some takeaways, just to make sure that we understand what the estimated tax payment is. Estimated tax payments, what are they? Well, let's start right here. Their estimated taxes are payments made to the IRS throughout the year on taxable income that is not subject to federal withholdings. Typically, freelancers, those who are self-employed, businesses, and some investors have quarterly tax payment obligations. All right. In 2023, quarterly tax payment obligations are due April 18th, June 15th, September 15th, and the final payment is due at the end of January in 2024. Okay, that is for this year. W-2 workers whose tax liability is not fully covered by their withholdings may also need to pay estimated taxes. That's something to look at as well. Okay. And so I would recommend, and we're going to just really quickly go over this article. Go ahead and make sure to open it up and save it. Okay. All right. So here, very quickly, what are they? What are estimated tax payments? When are they due? Okay, here are the payments we're talking about right here. Okay, just really quickly, really straightforward for the year. The last one is January 2024. Okay, just really quickly. And again, like I told you, we would look at the dates again. Who should make estimated quarterly payments? So people who aren't having enough with help. All right, you have that information here. Self-employed, independent contractors, people with side gigs, and so on and so forth. Okay. Businesses, corporations may also need to make estimated tax income payments if they'll owe at least $500 for the tax year. And maybe investors and landlords. That's something for you to look at as well over here. How do I calculate this? Well, there's more than one way, all right, to go ahead and calculate it, all right? Which method makes more sense for you depends on how confident you are about your projected annual income and tax bill, all right? So we can start by estimating based on prior year's taxes, all right? You can do that, all right? And you can read this as well. You can estimate the amount you'll owe for the year, send 1/4 of that to the IRS. For instance, if you think you'll owe $10,000 for 2023, let's say, then you can send $2,500 each quarter. This may be best for people whose income is pretty stable, pretty much the same throughout the year, or people who have a good idea about what their income will be. Or another method is to annualize. All right. Another method is to estimate your annual tax liability based on what you've already earned this year. Okay. This is often better for people whose income varies. All right. Essentially, you estimate your tax bill at the end of each quarter based on a reasonable expectation of your income and deductions so far this year. And what's really nice, is that the IRS right here has a worksheet for you. I'm going to open it up in another tab and share it with you, okay, right here to help you do the math. Okay, so it has a worksheet right over here. I'm going to share this with you. Please go ahead and save it. I want to make sure that you get all my handouts, so to speak. This is publication 505. We're talking about that information, and it can help you do the math. So here it is, right over here. I'm going back to the article here. There's one more very important form here to look at, and I'm going to share that one with you as well. Let me finish this paragraph right here because this is all good. All right. Either way, you'll use IRS Form 1040-ES to show your income estimate and project your tax liabilities. So let's take a look at this one, and I'm going to share this one with you as well. ES. All right. It's all in the chat, so make sure to go ahead and take a look at that. ES. Okay. And there you go. IRS Publication 505, the previous one I just shared, Publication 505 has all the rules and details, and a good tax software, right, will help you fill out the forms and do the math, essentially. All right. Very, very important. Okay. All right. Let's keep going. And again, please read this article in its totality. All right, I want to make sure that we have enough time to cover everything else today in our hour plus together. All right, how to estimate taxes for an income tax extension. You can read that as well. All right, how to pay quarterly taxes or make estimated tax payments. Very important. Several ways that you can do that, and the list is right over here. Okay, all right, all right. Frequently asked questions. Again, you can take a look at that. And that pretty much concludes this article here that we have, which is really nice, make sure to ask any accountant, tax professional, or your SBDC advisor if you have any questions about this. I'm sure it is a very common question that tax preparers get, especially around this time of year. So don't be afraid. Don't be shy. Make sure to ask questions. Absolutely. All right. Let's get back to it. Let's get back to our slides, shall we? This is great. All right. So again, all right, make sure that you understand that when you overpay, make sure they understand that when you overpay or underpay, there could be issues on both. So you want to make sure that you do the math as accurately as you possibly can. All right. So that's key. let's take a look at, since we were talking about tax preparation, essentially, okay? Let's talk, right? A tax preparation software, that's one option, but a tax professional, that's another option as well, okay? So tax preparation, who should do it? Should you do it by a tax professional? The average cost for small business tax preparation is $727. Okay. Most business experts say a tax return is best prepared by a tax professional. All right. If dealing with a tax problem or an issue or a big question that you might have, please make sure to consider your hiring a tax professional. And that's key. That's really, really important. Right. But that's not the only option. You can, and this is important, you can also do it by yourself. All right. The average amount of time a small business owner spends doing taxes is 13 hours. 13 hours. All right. The odds of being audited, though, increase for small businesses that do not, and this is important, involve any tax professional. Over 60% of DIY business tax returns have a mistake in them. The IRS knows this. And so if this is done by yourself, you have a greater chance of being audited. All right. But these are options for you. They're all options, one or the other. Essentially, what we're doing is we're trading money for time or time for money, essentially. All right. Let's talk about DIY tax prep. All right. DIY tax prep. But before we do, let's get to the questions. Valerie says, "You're awesome. I love your energy." Oh, thank you. I try. Christy has a good point. In my experience, a tax preparer always pays for themselves by not making mistakes and knowing the proper deduction. All right. Okay. That's very, very key. Very, very important. Okay. Tax preparers will know the deductions. You may not know every deduction. And so that's a consideration as well. Okay. But let's talk about DIY tax preparation and how that works. All right. I'm going to share with you a list of tax preparation software. And this is the latest one from 2023. TurboTax, H&R Block, TaxSlayer, Jackson Hewitt, TaxAct. Those are all there. They're best for different scenarios, different situations. Okay. Intuit TurboTax is the most robust tax prep provider. Online and in-person tax prep, H&R Block, TaxSlayer, that's more competitive pricing, and so on and so forth. Now, I'm not paid by any specific one. Okay. I'm not paid by any specific one. Obviously, you're not. I'm not here pushing any one of them, but I do have an article that talks about all of these. Okay, and there it is. It's right here. Top tax solutions for 2023. Let's move to the article in just a second. There it is, right there. Best tax
Participants can now
software
view your application.
for 2023.
You have started
I'm going to go ahead and
share.
share this with you. All right, with you right over here with everybody in the meeting, and I'm going to paste this. This is the article itself. I'm seeing in the chat here. There's a question for after the presentation from Casey, so I'm going to go ahead and answer that after the presentation. So thank you, Casey. Thank you. Let's take a look. So again, best tax software. Again, this was voted by our friends at themotleyfool.com. All right, The Ascent. All right, every year they come up with this. This is from June. All right. So again, TurboTax, H&R Block. Read through this. Find out which one works for you. If this is the path that you have opted for. If this is the path that you have opted for, the DIY tax preps path. Okay. So that's again totally up to you. All right. This is where I got the you can get the pricing, you can get some of the functions that they offer. Again, it's totally up to you and your business. This is where I got that slide there. H&R Block and whatnot. This is from their tax experts. Okay. Very, very important. If you're more comfortable with a DIY solution, maybe H&R Block, I don't know. That can be something that you can go ahead and take a look at. All right. Okay, let's go on to our next slide here. All right. Nice.
Participants can now see
Now,
your
let's take a look at
application.
this, everybody. Let's talk about, again, tax preparation by a professional. What does that mean? It costs more. It will cost more money. Yes, absolutely. But again, and again, this is building on what Christy was saying. They know the deductions. They know the latest deductions. You might have been familiar with last year's deductions. There are still some that are applicable, obviously, every year, but there may be new ones. Tax law changes too. All right. They will know all the information for the state and for the federal as well. So it might be something that you could consider investing in. And again, if there are mistakes, that could come back to haunt you if you do it by yourself. So again, like Christy was saying, there is something to be said about preparation by a professional. So I just wanted to add that slide and really talk about that. All right. Okay. This year, there was from the Fool again, taking a look at the best accounting software. Now, again, this is accounting, not tax preparation. But again, you're keeping track of your ledger. You're keeping track of all the financial transactions. You're making sure that you have the accurate records, proof, and documentation. Every year, these sort of change a little bit. Best overall, they declared FreshBooks. Again, I'm not being paid by FreshBooks to say that. All right. But again, the runner-up, QuickBooks. For multiple users, Sage Business Cloud Accounting. For more experienced accountants, Account Edge Pro. The best value would be Wave. Extra features would be Xero, Xero. And anything best for automation, Zoho Books. Okay. So this is, there you go. All right, let's take a look at a last article today, where we're going to take a look at our accounting software for small businesses. All right, and I'm going to share that with you again. Okay, give me a second here. I have that
Participants
little
can now
announcement
see your
that says
application.
that you can see my application. So again, this is from our friends at the Balance Money. And again, it has all the information that we were talking about here. Yes, I said thefool.com. I meant the Balance Money. I apologize for that. I made a mistake there. But let's keep going. All right. Look at this. We've got the Balance Money. This is for you, just for your consideration, just to look. I know I'm big on handouts and articles. I want it to be interactive as best as I possibly can. All right. There's a lot to go through. Give me a thumbs up if you all are got that article and are saving it and got the other articles. Give me a thumbs up. Push that reaction button. Go ahead. Thank you, Christy. Thank you, Shonda, Dawn, Veronica, Casey, Valerie. Great, great, great. This is how I get the feedback from you. This is perfect. Awesome. All right. Gabe, thank you. Okay. Make sure to save those articles in those forms. What you can do is you can go on your, let's say you're using Google Chrome, make a bookmark and save those articles in your bookmark tabs so that you can open it up later on. So that's something that's important. So that's kind of neat. Okay. All right. Again, read through this. It's totally up to you. Again, if you prefer to do this via Excel, that also works. You're going to need to create your own financial documents, though. All of these generate financial documents. So there you go. We need to move on to our ratios. So let's get to it. All right. But before we do, let's have a quick true or false, everybody. Let's do this. Everybody see? Yes, you can. Awesome. All right. So let's do this. I like to do true or false as a learning or review as a learning opportunity. Okay. So the date tax returns are due depends on how the business is set up. Well, the answer is true. Absolutely. If your business is set up, oops. Yeah, you're all giving me your answers. Awesome. Yes, true. Very good. Very good. Awesome. All right, this next one's a little bit more tricky. Business owners do not need to keep track of returns or refunds made. What do you all think, everybody? What do you all think? Everybody's giving me false. That's right. Returns and refunds may involve income, and that's a big, big situation where you need to keep a track of it. Absolutely. All right. Okay, are you ready? If I delay paying taxes, I can delay paying taxes if I file an extension. This one's interesting. Careful now. There's a difference between paying taxes and filing. False. Extensions are only for filing the return, not paying taxes, and must be filed, remember, before the due date. And that's key. That's important. All right? Okay. All right. Let's talk. Are you all ready, everybody? We've gone through our tax preparation checklist. Now let's look at the small business year-end checklist, just to make sure. I'm running just about 4 minutes later on what I was expecting to get to, but that's okay. Let's get to it. So, number one, are you ready? Getting and keeping your financial books in order. Again, for your end of the year, very, 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 very important. Have an organizational system. Have a dedicated computer where you go ahead and do all of that. All right, very key, very important. And number two, consider having a bookkeeper that helps you. All right, that's a consideration that you can look at as well. Okay, again, not necessary. You can do your own bookkeeping, absolutely. But, and this is key, that is a consideration for you to do. Okay, next, determine your financial position. Did you come out on top this year? Did you not come out on top? All right. How do you figure that out? Well, you figure that out with the classic 3 types of standard financial statements. We've been talking about these the last few weeks, for those of you who are with me, but they include the balance sheet, the income statement, also known as the profit and loss statement, and your statement of cash flow. What's nice is that if you use a program like QuickBooks, for example, they all do this type of function. But if you use a program like QuickBooks, you put in all the information throughout the year, boom, you can generate financial statements automatically so that you don't have to go ahead and plug in your information from your ledger on Excel, for example. So that is good. So that's how you determine your financial position. All right. Am I in the red? Am I in the black? Right? Very basic question. And again, you don't know this until you look at your financials. Until you look at your financials. All right. Number 3, it's time to plan for your upcoming year. Upcoming year. Planning. Very important. Okay. All right. You can evaluate goal achievements. Remember, you've set some goals. All right. You set some goals. All right, my little graphic here has disappeared. That's weird. That's why it looks a little strange. So I apologize for that. But you've set some goals at the previous year. Did you achieve them? Also consider setting other goals for the coming year. Did you meet those goals? Again, from a business point of view, but also from an accounting point of view, from a marketing point of view. So evaluate your goal achievements. Also, are you considering current tax strategies? All right. Again, talk with your business advisor, SBDC advisor, talk with your accountant, bookkeeper, and ask, are there any other tax strategies, tax preparer, for example, that's somebody else you can talk to, that you can benefit from? Again, a professional will be able to help you with that. Okay, very key, very, very important. All right. Let's move on. Number 4, consider using ratios to plan for the coming year. How do I plan, Dr. Prevost? How do I plan? Well, ratios are important. How do you get ratios? You get ratios by combining numbers that you find in your financial documents. All right. We've talked about this last week, but let's have a quick review of the ratios. The break even, know what it takes. How much does your business have to sell in order to break even? How many customers does the business have to serve in order to break even? The break even, and again, you can find this online, is calculated by doing the total fixed cost divided by total sales minus total variable cost divided by total sales. So again, it's a tool to help owners be informed, but not to look into the future. This break-even analysis talks about fixed and variable cost. Really quickly, a fixed cost is a cost that you have no matter how much business you have. You need a printer, you need a computer, you need a truck for your contracting work or something like that. Your variable cost is going to be the cost that you incur according to the amount of business that you do. All right. The more business you do, the more cost it'll cost you. Hopefully you get a profit out of that. All right. That's your variable cost. Okay. So far, so good. Okay. Very important. The next one to look at is the net profit margin. And again, it's an efficiency ratio. All right. It allows you to take a look at a number of things. It tells us the percentage of every dollar that you turn into a profit. Okay. How do I get all this information? From my financial documents. Okay. So net profit or loss divided by net sales, again, or total sales. But in this case, let's take a look at an example. Let's say we have $33,200 divided by $44,700. That gives us 0.74. So 74% of every dollar turns into profit. This is excellent. The higher, the better. It tells what the amount of money earned by the business was during the period without considering expenses. That's the beauty of the net profit margin. Calculate the net profit margin at the end of the year. You can get a good sneak peek at what the trends will be for the coming year. That's why ratios help you prepare for next year. You got it? Okay. Net profit margin. But there's more. The net profit is what's left over after all of the costs have been considered. Let's try the return on equity. The return on equity is a measure of efficiency and tells us how much a business spends in order to make a dollar. All right. So for example, the formula is net income divided by owner's equity. $33,200 divided by 16,250. That's 2.04. So the equity, are you ready? The business generated sales of, so the equity in the business generated sales of 2 times the equity. We know that this is high or low by only comparing it to the average return on equity among others in the same industry. Okay. Again, also, this owner will need to be careful and not look at this or any other ratios in isolation. All right. But instead, look at all of them, at many of them, to get a general picture. All right. The average return on equity, again, will vary widely depending upon the industry. And that'll be, tech industry, lodging industry, food industry, all of that. The ROE, the return on equity, is your profitability ratio. It'll be different. Okay. So again, where do we get this information? From our amazing 3 documents: balance sheet, income statement or profit and loss, and the statement of cash flow. Make sure that you have those ready at the end of the year, generate them, produce them, see. It gives you a good idea of the health of your business, especially when looking at ratios. Remember, I mentioned that looking at ratios individually might not be the best idea. You want to look at many ratios at the same time. They'll give you a trend. You might have a slumping return on equity, but a net profit margin that is rising. That is a more complicated view of your business, okay? It's more complex. It allows you to see the whole trends. Are they going up? Are they going down? Totally up to you. Totally up to your business, I mean. I'm sorry. Next, debt to equity ratio, an important one. It's a measure of your liquidity. It measures the amount of debt a business has compared to what it owns. All right, so total liabilities divided by total equity, debt to equity ratio. So what does that mean? Where do I get this? From my financial documents. Yes, 63,000 example divided by 162,500. That gives me 39%. 39% of each dollar in equity is what? Is debt. A debt to equity less than 1 is considered good, okay? And again, as a debt to equity approaches 2, banks consider this to be risky because it means that much of what the business has is being paid for by debt. So again, these are sneak peeks into the future, so to speak, okay? All right, yes, I know past performance is no indication of future performance, but this is how banks look at it. The past will show a trend. Things can change, obviously, all right? But it's a good sneak peek, so to speak, into the future. It's not guaranteed, all right? It's never guaranteed, all right? There could be an overall slump or something like that. There can be all sorts of different things, all right? Or there could be a boost in the economy. You might have had a sort of flat or declining business, and then the business rises up. Again, the ratios will give you a sneak peek into the future. Let's keep going. The current ratio. What's the current ratio? Anytime you hear current, think short term. Think within 1 year. The current ratio is the measure of liquidity, or how fast could a business pay off its short-term debt if it had to, okay? All right? It's calculated as the total assets divided by the total liabilities, and that's your current ratio. We're talking about an example here, 225,500 divided by, let's say, total liabilities of 63,000. That gives us 3.5. Thus, this business has 3.5 times more times the assets than it has in debts, right? You can see it right here. Boom. It's considered high or good for a business because it shows that the debt is low compared to the assets. Therefore, short-term debts could be paid off easily if necessary. Creditors like to see a current ratio of 1 to 2, right? So this business is considered liquid and financially solvent in the short term. All right, great. Now, are you ready? Any questions? Please make sure you put them in the chat. Any questions in the chat? We got a question in the chat. Let's see. Can you speak to analyzing your income to see if you need to do a spend down, like purchasing extra office supplies or equipment? All right. There are different, again, your income, we're talking about all of your income streams. You have to make sure that you are able to look at your income objectively. And again, use those 3 documents right there, because you might have a need to purchase extra supplies, extra equipment, and make sure that there's a balance in between what you do. All right. That's key. You don't want to overdo it when it comes to your expenses, but at the same time, you want to see these as investments in your business. So that's key. That's a balance, so to speak. I hope that answers the question. So that's what I would say. That's what I would say. Thank you, Christy. Thank you. Let's go on to the review. Yes. All right. True or false, everybody? Keeping track of financial information throughout the year is the responsibility of the business owner. What do you think? Go ahead and give me your answers. Give me your answers. Give me your answers. What do you think? It's the responsibility of the business owner. I'm looking at the chat, and the answer is yes, absolutely. Don't think, oh, well, I have a bookkeeper. Oh, well, I have an accountant. I don't need to look at the numbers. No, have meetings with them. See them, talk with them. Right? That's key. That's important. All right. 3 types of financial statements: balance sheet, income statement, and statement of cash flow. What do you think, everybody? Is that true or false? What do you think? What do you think? Now, they might have different names, but these are the 3 of them. So this is true. Okay. Again, if you're using a program like, I don't know, QuickBooks or something like that, you can generate this by yourselves using the report generating function, which is really nice. Okay, really, really nice. All right, I'm looking at the clock, and Was I able to wrap up? Oh my goodness, I think I was. So or catch up, I mean, that's what I meant. We were about 4 minutes late, but now we're about 5 minutes early. Oh my goodness. So let's quickly talk and wrap it up. We have seen a small business tax preparation checklist to help us prepare for reporting. Very key, very important. We have also looked at a small business end of the year checklist to review the year and plan for the next. All right, I'm going to stop the sharing right over here. Remember the power of ratios. You get these ratios with the information you get from your financial statements. These ratios are predictors, indicators. Banks, investors will use them. They'll take your documentation and they'll perform that ratio analysis. Okay. Any questions about ratios? Please, this is the time. Okay. Again, don't get too caught up on one ratio. All right. This is a broad view. It looks at trends. Okay. Any questions from anybody here? We're about 5 minutes early. This is the time. Absolutely. We've got Jeff, who's here, who can help out as well, who's one of our business advisors. Okay. Any questions? No? All right. Well, I'm still here. I'm going to actually finish my slide presentation. All right. And so let's reflect a little bit in the chat, everybody. What was one thing you learned from today's course? One thing. And what is something you'll consider doing as a result of today's session? Go ahead, everybody, in the chat. All right, keep going, keep going, keep going. All right. Yes, very good, very good. Oh, so let's talk. Dawn says ratios. Where do I find the info from others? You can go ahead and take a look for our previous sessions, and it'll take me just a second to get there. I will copy and paste it in the chat. But we have our previous sessions all on our YouTube channel, SBDC at BMCC. I will get to that YouTube channel in just a bit, and I will paste it in the chat. If Jeff, you would like to do that as I'm answering the rest of the questions in the comments, all right, you can help me with that if you want to do that. So yeah, that's where we would find information about more ratios that we talked about in previous sessions and so on. Another opportunity is for you to discuss this with your small business advisor, or very simple, you can go ahead and take a look at financial ratios on Google. Go ahead and search for them. You can take a look at a list. There are 5 categories of ratios that you can produce. And remember, they're all produced with your financial statements. Valerie says, I learn which form I have to fill out as a sole prop. Yes, absolutely. Companies to compare. Absolutely, Don. Very good. All right. Casey had a question. Previous meeting recordings? Yes, again, you can search for it. Small Business Development Center, SBDC at BMCC on YouTube. And we have our channel there. It's all there for you. All right. We can go ahead and do that. Okay. Tax paperwork to fill out, said Jaden and Vanessa. Thank you very much. Absolutely. Shonda says, definitely going to invest in professional tax prep. Okay. There are advantages to both, obviously. But again, remember, you're always trading money for time and time for money, and accuracy. So that's key. Organize my receipts more frequently and more regularly. Yes. Okay. Don says, I have a lot more to learn. Haha. Yes, exactly. Shonda says, also try to stay as organized, like Don mentioned. Absolutely. Let me go ahead and get that YouTube channel, our YouTube channel. It'll take me just a second. I have to pull it up here. And give me 1 second, everybody. I have it on my list here. Where is it? It's somewhere on my list. But stay with me here. Oh, there it is, right there. I'm going to go ahead and copy this and put it in the chat, everybody. Stay with me. I have my final one. let's see. Casey also says lots of great info to take in. Definitely need to rewatch all of these multiple times to absorb it all. Yes, absolutely. And here, by the way, is the link to the YouTube channel. Is that right? Yes, it is. So this should be our YouTube channel, right over here. Okay. And it has all of the information that we have here. It's all there. Business planning, everything, all the videos. It's all there for you. All right. And last but not least, final slide. Are you ready?
Participants can
A
now
big
see
thank
your
you
application.
to all of you.
You have started a
And
screen
this is our
share.
information right over here. Again, sbdc@bluecc.edu, sbdc@bluecc.edu. It is there for you, 541-278-5833 at any step of the business development process, whether we're talking about business ideas or, something like that, just to chat. The very first chat with the advisor is always special. You get to connect with them. It's amazing. Is your business up and running? Maybe we're talking about growth strategies or something like that. Again, at any step. And it is there for you, 541-278-5833, 541-278-5833. And everybody saying thank you. Thank you so much to all of you for being here. I'm going to be here. Our advisors are going to be here. And it is great. Our advisor, Jeff, is going to still be here online to answer any questions that you might have. All right. Thank you, Veronica, for the hand clap. Thank you. Thank you, Casey, Deborah, Gabe, Jaden, Vanessa, Dawn, Shonda, and Valerie, for everybody being here, for learning. There's a lot to look at. Feel free to go ahead and listen to the recording again and take a look. And this was great. This was fun. You're free to go if you would like. It's 11 o'clock, but I'm here. We're going to be here for questions. Anybody have any questions? I'm here. This was fun. I always find these fun. All right. Anybody? Feel free to go. If you're done, we're done. Have a great day, Casey. Thank you. Thank you to Casey, Gabe, Shonda, Veronica, everyone. That was awesome. Thank you. Have a great day, Shonda. Thank you. All right.